Hello and welcome to this month's market update. I'm joined by Tom Lambert, member of our capital markets and asset allocation team. Welcome, Tom.
Hi, Carla. Nice to be here.
Yeah, thanks for joining us. And so let's get started with the global economy. What's the latest update there?
Well, over the June quarter, we've seen some recently solid data coming out of the US and Europe with some solid levels of growth. Having said that, there is an easing off in terms of relative peaks that occurred in the US's case 9 months ago and Europe 21 months ago. In the US, business and consumer confidence remains strong. In Europe, we've seen a pickup in manufacturing production and service sector activity at higher rates than previously. So that's been positive. In Japan and Australia, there have been solid levels of growth that have been above previous levels. So that's all broadly encouraging. And the UK's been slowing down, but that's not surprising given the prevailing uncertainties regarding Brexit.
Yeah, fair enough. There's obviously a lot going on offshore. And with this level of buoyancy, particularly in the US, have we seen an uptick in inflation?
Yeah, there has been a modest uptick in inflation in the US, with core inflation picking up to 1.9% per annum. It's interesting too, with regard to recent data, that there has been an increase in average hourly earnings at the highest rate since 2009. So that's occurred in a backdrop where wages growth has been quite stagnant over the last few years, and it's actually quite an encouraging development in a way. Labour participation rates have also increased in the US, so when you put those two things together, that indicates that any surplus capacity in the US economy is being mopped up, and there is latent wage pressure that could occur in the near future. But we wouldn't think the signals are that would occur at an alarming level.
That sounds reasonably positive.
Just one thing to add to that is that all this gives further support to the US Fed to raise rates further in the year.
Okay, I think everybody will be waiting and watching to see what the Fed does. And so how has all this news translated into equity market movements?
Well, so far, this sort of broadly positive economic activity has translated into positive results for equity markets, particularly for developed markets and Australian equities. In the month of August, the US equities market has been the continuing standout with a favourable reporting season. Europe and the UK have lagged to a degree, but importantly for an Australian dollar investor, the developed market equities returns in Australian dollar terms have been enhanced. The Australian dollar has been relatively weak over the month of August, particularly compared to the US dollar. Now that US dollar strength has hampered the performance of emerging market equities, particularly for countries that have weak fiscal positions and have significant amounts of debt that are denominated in US dollar, that they find continually challenging to service, and that is reflected in their market pricing of those countries. The other factor that's been unfavourable to emerging markets is this increasing uncertainty about an escalation of trade tariffs, as presaged recently by Trump. So we're continuing to watch those two factors closely to see how they play out.
There's obviously a lot to monitor at the moment. Do some Twitter monitoring and see what happens. Hopefully nothing too dramatic. And just in the domestic market, what's the latest news there?
We had a reasonably positive number in GDP growth that I referred to in the June quarter. Now that was attributable to a number of factors, which is quite reassuring because it suggests that there is still some breadth in that improvement in GDP activity. Probably one of the standouts was an increase in government expenditure, which has had a negative impact over the previous 12 months or so, and it may indicate an increase in infrastructure spending. Business investment remains, positive, but it is slowing down to a degree, as is housing construction. So that's definitely one to watch. New housing approvals have slowed down in the recent quarter, and it's particularly the case for high-density projects. So that has also been reflected in, property prices. So again, that's something we'll watch closely.
Great, thank you. Well, let's see if the spring auction season brings some positive news. and maybe even some positive football news.
We hope so. There's always hope, Carl.
It's going to be a busy month. So thanks very much for joining us, Tom, and thanks to you as well.